Okay, welcome. If you've earned good money, and I mean really good money, there's a good chance the IRS has quietly told you that you earn too much to contribute to a Roth IRA. And most people just accept that. They move on. They keep paying taxes on every dollar they pull out in their retirement, and they never question it. What I'm about to show you is a completely legal strategy that lets you get money into the Roth account anyway. And not just a little money. We're talking up to $46,500 additional dollars per year. Tax-free growth, tax-free income, no required minimum distributions, ever. This is the Mega Backdoor Roth. And by the end of this video, you're going to know exactly how it works and whether you qualify. Here's the wall most high earners run into. The IRS says if you're single and you earn more than $165,000 a year, no Roth IRA for you. If you're married filing jointly and your household earns more than $246,000, same answer, door closed. And most people hear that and think the Roth is just not available to them. Their advisor might have even told them that's the case. But here's what nobody told them. The income limit applies to direct contributions. It does not apply to conversions. And that one distinction changes everything. Before we go further, let me make sure we're on the same page about why the Roth is worth fighting for. 3 reasons. Number 1, tax-free growth. Every dollar inside a Roth account grows without the IRS touching it. Number 2, tax-free withdrawals. When you retire and start pulling money out, you pay 0 taxes. Not reduced taxes, 0. And number 3, no required minimum distributions. With a traditional IRA or 401k, the government forces you to start pulling money out at the age of 73, whether you need it or not. With a Roth IRA, no such rule. You pull it out when you want to, or you leave it to your kids. That's why high earners fight to get money into a Roth, because on the other side of it, the government can't touch it. Now, before we get to the mega version, let me quickly explain the regular backdoor Roth, because some of you may have heard of this and they're related but different. The standard backdoor Roth is a 2-step process. Step 1, you contribute after-tax dollars to a traditional IRA. No income limit on that. Anyone can do it. Step 2, you convert that traditional IRA to a Roth IRA. Again, no income limit on conversions. The limit for a regular IRA is $7,000 a year, $8,000 if you're over 50. So it's a solid strategy, but the dollar amount is relatively small. That's where the mega comes in. Here's where it gets powerful. Most people know about the 401k contribution limit, $23,500 in 2025 if you're under 50 years old. What most people don't know is that $23,500 is not the total 401k limit. It's just the employee deferral limit. The IRS actually allows total contributions of up to $70,000 per year into a 401k, including employee contributions, employer match, and one more category most people have never heard of, after-tax contributions. That gap between what you put in, what your employer matches, and the $70,000 ceiling, that is your window. And if your plan allows it, you can fill that window with after-tax dollars and then convert them to Roth. That's the Mega Backdoor Roth. Let me walk you through it simply. Step 1. You max out your regular 401k contributions. $23,500 if you're under 50 years old, $31,000 if you're 50 years old or older, and then step 2, your employer adds their match. Let's say that's another $8,000. That leaves you roughly $38,500 of contribution space remaining before you hit the $70,000 ceiling. Step 3, if your plan allows it, you contribute after-tax dollars into the remaining space. Then you convert those after-tax contributions into a Roth 401k or roll them out into a Roth IRA. From that point forward, the money grows tax-free, it comes out tax-free, and it never triggers a required minimum distribution. 3 steps, 1 decision, a completely different retirement. Let me put this into perspective. The standard Roth IRA limit is $7,000 per year. Most high earners can't even access that directly. The Mega Backdoor Roth opens the door to an additional $46,500 per year in Roth contributions, on top of your regular 401k. In 1 year, you could put up to $70,000 total into Roth accounts. That is 10 times the standard Roth IRA limit. And here's what that means over time. $46,500 per year compounding tax-free over 15 to 20 years and is a life-changing number. The wealthy have known about this for years. Corporate executives at Google, Amazon, Microsoft, Apple, their plans have offered this for a long time. Now you know about it too. Now here's the critical question. Does your plan actually allow this? There are 2 things you need to check. Number 1, your 401k must allow after-tax contributions, not Roth contributions, after-tax contributions. These are a separate category. Look in your summary plan description or ask your HR department directly. Number 2, your plan must allow either in-service withdrawals or in-plan Roth conversions. One of those 2 features must be available. If your plan has both of these, you may be sitting on an opportunity you've never taken advantage of. One phone call to your HR department or plan administrator could open this door. Most people never make that call. Here's where we take this to the next level. The Mega Backdoor Roth is powerful on its own, but when you combine it with a properly structured permanent life insurance policy, an IUL or whole life, you now have 2 completely separate tax-free streams or income streams in retirement. Stream 1, your Roth account, tax-free growth, tax-free withdrawals, no RMDs. Stream 2, your life insurance policy, tax-free income through policy loans, a death benefit that transfers to your family income tax-free. One covers your retirement income, the other covers your legacy. Belt and suspenders. That is how the top 1% builds retirement income that the IRS cannot touch from 2 different directions. Let me ask you a few questions. Do you earn $150,000 or more per year? Are you already maxing out or close to maxing your 401k? Has the IRS blocked you from contributing directly to a Roth IRA? Are you concerned about paying taxes on every dollar you pull out of retirement? Do you want income your children can inherit without a tax bill attached to it? If you answered yes to most of those, this strategy was built for you. And here is what I want you to understand. The people who execute this are not geniuses. They just had someone in their corner who knew to bring it up. That's what this channel is about. My name is Leandre Boone. I'm the founder of Buckeye Financial LLC. I'm a former the Ohio State Buckeyes defensive back and a member of the 2002 BCS National Championship team. I have spent over 20 years in the insurance and financial service industry, and I'm licensed across 8 states. I built this practice because I spent years watching people work hard, earn good money, and still arrive at retirement unprepared. Not because they didn't try, but because nobody ever showed them the full picture. My mission is very simple. The strategies the top 1% have always had access to, you deserve to know about them too. And I'm here to make sure you do. So here's your next step. Book a complimentary retirement protection review with me directly. We will look at your 401k plan, your income, your current tax exposures, and I will show you whether you qualify for the Mega Backdoor Roth and exactly how to implement it in your specific situation. No pressure, no obligation, just clarity and a real plan. The link is on the screen. You can scan the QR code right now while you're watching. The people who act on information like this are the ones who build something that lasts. I'll see you on the call. Remember, this information in this video is for educational purposes only and does not constitute tax, legal, or investment advice. Please consult a qualified tax professional or financial advisor regarding your specific situation. Buckeye Financial LLC is licensed in Virginia, Maryland, North Carolina, South Carolina, Arkansas, Texas, Ohio, and Tennessee. Thank you for your time.